Welcome. In this video, will ZBCN coin rise again? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. The most important structure in the chart is the formation of an uptrend, which has been going on steadily for a long time. This uptrend is a very valuable structure that reveals the market's positive momentum and strong buying pressure. From a general technical analysis perspective, the fact that the price is moving in the direction of this trend is one of the most tangible indicators that buyers are still dominating the market, confidence is still high, and bullish expectations are still alive. For investors, such structures are considered a symbol of stability and confidence in the market. At the moment, the price appears to be touching exactly this rising trend line. These touch points are of great importance in technical analysis because such levels work as strong support zones where the market can react. These levels are often critical areas where buyers reappear and try to move the market higher. This touch of the trend line not only gives us information on whether the current uptrend will continue or not, but also signals potential buying opportunities for traders. In this sense, the current touch can be considered both a technical and psychological threshold. Rising trend lines act as a kind of guide in the markets. As long as the price is able to stay above this line, it is possible to speak about the soundness of the bullish technical structure. Especially in long-lasting trends like these, when the price touches the same line several times and reacts upwards, it reinforces the strength of the trend and the buyer pressure in the market. In the current situation, we observe that the price respects this trend line and tends to react upwards again when it touches it. This shows that there is still serious buying interest in the market, and this interest will continue as long as the trend is not broken. Of particular note at this point is the price's ability to hold above this trend line. If the price continues to work this area as support, this will give investors confidence and could lead to an upward acceleration in price action. Such trend contacts are also powerful psychological thresholds. This is because traders are usually more cautious but also more motivated to take positions at these levels. This increases market volume, boosts liquidity, and positively triggers volatility. Moreover, the current position of the ascending trend line suggests that the price is approaching the decision moment in technical terms, because either the price will stick to its trend by making a strong bounce upwards from here, or it will threaten downwards with a weak reaction. However, given the current data and market psychology, the price's contact with this trend line is more likely to end positively. This optimism is supported by the upside bounces observed on similar contacts in the past. This tells us that the price maintains its respect for this trend line and may be at the beginning of a new upward momentum. Maintaining the uptrend is very important not only for short-term gains, but also for the continuity of the long-term trend. Therefore, the price's respect for this line also gives us important clues about the future of the trend. The longer the price stays at these levels, the more likely it is to make new highs, and the healthier and more balanced the market will be. In addition, a volume-supported upside breakout at such trend contacts may not only cause the price to bounce off the current level, but also to move into a new bullish channel. Traders' strategies are also shaped by this technical outlook. This contact with the support line can be an ideal ground for new long positions. In particular, positioning stop-loss levels below this trend line offers the opportunity to maximize potential gains while minimizing risk. This gives us a very positive picture both technically and strategically. But we can't decide the analysis with trends only. Let's look at other metrics. Stay tuned. A careful look at the chart reveals the application of Fibonacci retracement levels, a classic and widely used method of analysis. This type of analysis is particularly effective in identifying trend reversals or correction zones within the current trend. In this particular scenario, a Fibonacci retracement tool was applied to the price action from top to bottom, carefully analyzing how the price behaved at certain levels. Fibonacci levels set the natural psychological boundaries in the market, as millions of traders around the world make trading decisions with reference to these levels. Therefore, levels like 0,382 are not just numbers, but technical milestones that are embedded in the subconscious of market participants. The most striking thing observed in the analysis is that after reaching the 0,382 level, the price struggles to break through this zone. This level often works as the first significant resistance point, because when the market comes to this level after a decline, there is usually a breather. Just reaching this level shows that the price has largely digested the previous decline and buyers are getting emboldened again. The key, however, is not only to test this zone, but also to break it to the upside and close above it. When this happens, the market shows that it is no longer just a reaction rally, but that it is preparing for a new bullish wave. Although the price meeting resistance at 0,382 may be perceived as negative at first, this is actually quite normal and technically healthy corrective behavior. Because no price movement goes up or down in a straight line, there are always pauses, consolidations, and small pullbacks at certain levels. The 0,382 level is a technical threshold where the price gathers energy and buyers and sellers come into balance. At such levels, if the price lingers for a short period of time, followed by a volume-supported breakout, it usually forms the basis for a healthier rise. Therefore, in the current situation, the pause of the price at 0,382 can be read as a potential preparation signal for a new and stronger exit. The Fibonacci 0,382 level is usually one of the weak correction levels, so it works most of the time as an intermediate stop of a continuation move, not a trend reversal. Therefore, if the price breaks through this level, it will be a sign that the upward momentum is gaining strength in technical terms. Besides technical analysis, such levels are also extremely important psychologically. Breaking such resistance zones triggers the thought that this time could be different in investors, and the possibility of the price moving upwards is taken seriously by the wider masses. This increases buying volume, positively affects volatility, and creates a more stable, bullish environment. The perception of a technical Fibonacci breakout, especially with the break of the 0,382 level, may cause many investors to enter the position. What is important at this stage is that the price once again approaches the 0,382 level and breaks upwards by retesting this zone. When this happens, a strong technical signal is born, and bullish expectations in the market increase further. The fact that the price tests this area as support after the breakout, that is the classic break and retest scenario, makes this structure even more reliable. Such a scenario would provide a favorable backdrop for both short-term and medium-term positions for investors. As a result, it is a natural process in terms of technical analysis for the price to rise to the 0,382 Fibonacci level and encounter resistance there. However, instead of thinking negatively about the failure to break through this level, we should focus on the idea that this area can be overcome with a strong breakout later on. Especially at such correction levels, the fact that the price tests it several times weakens the resistance and strengthens the possibility of a breakout. When we examine the chart in depth from a technical point of view, it stands out that a remarkable falling trend structure has formed on the RSI, that is, the Relative Strength Index. The presence of such structures indicates that the market has lost some momentum in the recent period, and the momentum has been suppressed to the downside. However, the main thing here is that this falling trend is now nearing its end, and the RSI line has the potential to break this trend upwards. Such breaks are considered to be extremely valuable technical signals, especially indicating that the positive momentum has strengthened and bullish expectations have started to come to the fore in the market again. The falling trend lines that occur in the RSI may not usually coincide directly with the price, but they give the investor an idea of the internal dynamics of the market. In the current situation, the RSI is approaching this falling trend line again, which it has tested many times before. If this approach is not limited to an ordinary contact, but carries out an upward break with a strong volume and momentum, a very clear signal that the market is preparing to change direction will emerge. This creates both short-term opportunities for investors and supports the trend reversal scenario. The breaking of a falling trend is a promising development not only on the basis of the RSI, but also in terms of the overall market structure. Especially in a leading indicator such as RSI, such breaks are a strong leading indicator that the price will change direction in a similar way in a short time. We should pay attention to the RSI trend.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.